Welcome to our very QuickBooks tutorial on buying and depreciating fixed assets. In this case study, we're going to look at the example of buying a new computer which has a useful life of 2 years. Before we can do the accounting for the acquisition of the computer, we need to go to the chart of accounts and set up the accounts that we need, which are going to be a top account for computer equipment, which is a fixed asset, and then we'll have two other accounts, a cost account and an accumulated depreciation account. So you'll see how we set these accounts up now. Here we're setting up the top account for computer equipment. Now we're going to set up the two accounts we're actually going to do the work in, which will be sub-accounts of computer equipment. The first account, as you can see, is going to be called Computer Equipment Cost, where we put the cost of any computer equipment that we buy, and we're just going to tick this to be a sub-account of computer equipment. And here we are finalizing the depreciation account. As you can see, we've now got a computer equipment cost account and depreciation account. They're in the wrong order, but we'll get to that later. Now we can move on and we can enter the bill for the computer equipment. This is very simple. We just put on a bill. We've not seen the Acme Computer Company before, so we use Quick Add to put them on as a supplier. And the date, we're going to select the 1st of October 2011. Try to remember that because it becomes important when we look at the depreciation. The amount of the invoice is £2,400 gross. And down in the account column, we're going to select computer equipment cost. Acme is standard rated for VAT. We put in a memo, save and close. The next part of our work is to start to depreciate the fixed asset, and we do this using general journals. So we select Make General Journal Entry. The date we want is going to be the 15th of October, halfway through the month in which we bought the computer. And our double entry is going to be a debit to depreciation expenses, and here we can begin to use QuickBooks as a calculator. The net cost of our asset was £2,000, and if we divide by 24 we get the monthly amount of depreciation. So we'll just finish this journal by putting in a memo and then selecting the account that we need to credit, which was our fixed asset computer equipment account. Before we save our journal, we want to do something very clever, which is to set it up as a memorized transaction. So we select the memorized transaction function, give our transaction a name, Acme depreciation, looks sensible. We ask it to be automatically entered, and for this to happen monthly. Remember, we bought the computer in October 2011, so our next date for depreciation is the 15th of November 2011. We're writing it off over 24 months. October was the 1st, so we have 23 months remaining. We select OK. Now we go and save and close our journal, and the memorized transaction is recorded. QuickBooks offers us the opportunity to track fixed assets, but it's not something we're going to use, so we'll turn that message off. We're now back at our chart of accounts, but we want to move computer equipment cost above depreciation. A quick way is to select the diamond at the top, which allows us to move the accounts around. So we've now done that, and we can see the effect of moving it when we look at our balance sheet. We can see in our balance sheet now that we have the cost of the fixed asset of £2,000 and 1 month of depreciation, £83.33. And here we're looking at the top and the sub accounts, but if we collapse the report, we're only now looking at the top account, computer equipment, which, if you remember, was the first account that we set up. We're now fast forwarding. We've closed QuickBooks and opened it again, and it's opened at the end of December 2012. It offers us the opportunity to enter 14 memorized transactions, which are the 14 monthly depreciation journals. So we let it enter automatically all of those journals. Now we look at our balance sheet, and we can see that the cost remains the same, but the accumulated depreciation is now going to be 14 months worth of depreciation, not the 1 month where we had left it. Here we're going to take a quick look at the June journal. We can see the date and the amounts that we're expecting, and we're back at the balance sheet. Thanks for watching. I hope this tutorial, although it's been quite long and covered a lot of ground, turns out to be very useful for you.